everybody, and welcome to our Simplify Consulting podcast. I'm Sheila Sambrook, Head of Delivery here at Simplify Consulting, and today I'm joined by my colleagues, Dom House, a lead consultant here at Simplify, Matt Short, our business manager, and Jane Brown, another lead consultant. Since the calendar year is drawing to a close, we thought today we'd take a look back at some of the key topics that have affected the wealth management industry and ourselves in particular at Simplify during 2021. So to kick off, firstly, I'd like to come to you, Dom, and ask you, has 2021 seen the need for intergenerational wealth planning become more widely recognised in the wealth management industry?
Yeah, thanks, Sheila. It's a subject that I've been keeping quite a close eye on this year, actually. I think it's something that's been bubbling away under the surface for a few years, and 2021 seems to have been a bit of a tipping point as to kind of getting this more widely recognised, getting it into the mainstream, getting it talked about, and bringing in some of the various aspects to it. I think within the advisor industry, it is now recognised that this is an important part of their toolkit, an important part of their relationship management to not only plan for inheritance, but also look at the wider family unit and what the needs are and the desires of the people coming up into the next generation. It's also valuable in terms of keeping that relationship ongoing into the future. I guess the reasons why it's becoming more widely understood is obviously we're now seeing the first of the boomers generation entering into retirement. So that's obviously a key drive for some of these conversations to happen. And we know, the boomer generation in general is, it's got a lot of that wealth that eventually will pass down to the next generation one way or another. It also has a potentially more complex family units to take into account. So, the divorce rates are higher. We may have, non-nuclear families to take account of. And that's obviously a good trigger for advisors to have that conversation and to take into account all of those extra requirements, which may not have been a factor a generation or two ago. There's also a recognition that inheritance doesn't necessarily have to just go down the linear path. It can skip generations, it can go to the wider family unit, as I mentioned. It's not necessarily just a given that it will go, from one spouse to another, or from the older generation down to the next generation, and so on. So it's obviously something that's important to take into account of and have that conversation. I think, sorry, excuse me, there's more that can be done. I think 2022 will kick this on to another degree. I think there's also the need to start having conversations in the wider wealth value chain as to the impact of intergenerational wealth transfer, in particular how that's going to increase over the next 10-20 years as more of the boomers grow older. And also it doesn't necessarily have to just come with death, it can come before that as well. I'd like to see some of the, some propositions, some more technology coming into the market that recognizes this, maybe within the asset management world or the platform world, and start to come up with solutions that help the advisors have this conversation and start planning effectively for it.
Okay, thank you, Dom. Okay, so let's move on to Matt now, please. And Matt, as our business manager, I'd like to specifically ask you about the IR35 changes that came into effect this year and how they've impacted us here at Simplify, our colleagues, our clients and our associates.
Yeah, cool. Okay, thanks, Sheila. I guess starting with Simplify then, I guess if I look back to the changes that came into effect in April, our model was quite straightforward in that we would either have a employee who's paid PAYE, or we would work with one of our trusted associates who generally would operate through a limited company. Given the changes that have come into effect, that doesn't work for the end client in a lot of scenarios, and they want a level of comfort that that people are on payroll essentially, so that IR35 changes essentially don't come into play. So for that reason, now we now operate with people through fixed term contracts, which previously we hadn't done. We've also partnered with an umbrella company as well, so we've had to kind of adapt our models to reflect the client and the type of work that's involved. There's also different commercial models. I mean, a typical model previously would have been T&M, and whilst fixed price was a thing, it certainly seems to be more and more prevalent now, which I think is fine. But at the moment, for businesses like us, there's a bit of a mismatch in terms of the risk, because if our model with the end client is fixed price, but a typical model with a contractor is day rate, there's a bit of a mismatch in terms of the modeling. So something needs to change there. But I guess what we have seen is an increase in demand, possibly as a result of IR35 coming into effect, where clients are less and less inclined to work directly with contractors, so are more likely to consider intermediaries like ours. So that's probably the impacts to us. In terms of associates, so we ran a roundtable event shortly after the changes came into effect with some of our associates. We've also recently done a survey across about 100 people just to get their views. Now we're 6 months in, to see how they're feeling about some of these changes. We'll actually share some of the kind of broader results in an IR35 paper that we're working on at the moment. But I think one of the key impacts that we've seen, and you probably don't need to look too far into social media to get the sense of how contractors are feeling, very much feels like there's a sense of people being forced into permanent roles, being forced to work with umbrella companies where they then have to pay a fee. And a lot of that is centered around blanket assessments being made, which isn't actually meant to be, isn't meant to happen as per the rules, but there's clearly some feeling out there that that's still happening. So a lot of those things basically affect the way that people are having to operate, perhaps having to consider permanent employment when people have often contracted for many years. And the net result of that in many cases is that people are receiving less income as a result of it. So that's probably some of the key changes, or some of the key impacts on associates. In terms of clients or end clients in this kind of new relationship, I guess businesses are either having to accept the risk that comes with the IR35 status determination being placed on them. They either need to give themselves a level of comfort that they can accurately assess the status of each role and accept the risk that comes with that, or in many cases what businesses are choosing to do is to either have more permanent staff, but that obviously comes with some complexities and some challenges when you're working in a transformation role, which when the work kind of ebbs and flows, or partner with umbrella companies, which a lot of companies have chosen to do, or use intermediaries such as ours. So whichever route you go down, there's pros and cons of each, but certainly a challenge that a lot of clients and businesses that use contractors and work in transformation have faced.
Have we seen a lot of initial teething problems during the first 6 months, do you think, Matt? Or
yeah, I think so, but it's probably consistent with what happened in the public sector. I think, yeah, the big thing is that, albeit this was, you know, a couple of years in the coming, because this was due to come into effect April the year before, but got delayed for, you know, various reasons. But I think, yeah, the challenges are that, you know, the rules are quite clear in that businesses shouldn't be making blanket assessments. It should be looked at, you know, the specifics of the role and should it be inside or outside. And I think the feeling is that businesses have, in some cases, decided to just either remove themselves from using contractors or make blanket assessments, which then makes it very difficult when you're in the contracting space to find work. So I think there's some of the issues that we've seen initially, but unsurprisingly, to be honest, because that's what we're seeing in the public sector as well.
Okay. Thank you, Matt. Really interesting. Okay, finally, excuse me, I would like to come to Jane. And Jane, I'd like to ask you, what do you think the key themes around the increased mergers and acquisitions activity we've seen in 2021 are?
Yeah, thanks, Sheila. So I think probably the key theme for me is the private equity acquisitions that we've seen this year. So one that stands out is the James Hay acquisition of Nucleus. So a desire to sort of increase their funds under management and make their business fit for the future, sort of changing their operating model and their technology by partnering with FNZ and being backed by private equity. Obviously, they've got the backing and the finance to kind of really make changes to their business. And another one that obviously is big story at the moment is the Bain Capital acquisition of LV. Again, some real big differences can be made with that business. 3 disparate businesses on 3 legacy tech stacks. Again, with that money behind them, they can really make some big improvements. I think this year for Simplify, just sort of looking at the types of engagements that we've had, we've seen a real big increase in sort of process improvement, operational efficiencies, technology improvements as well. So it kind of really aligns with what's happening in the market, you know, with these businesses wanting to make improvements and efficiencies. It's really had an impact on the types of engagements that we've had and also the number of engagements that we've had this year. So I think that's a really interesting point and yeah, reflection on our business too.
Okay. What about vertical integration?
Yes, we've seen the asset managers and platforms sort of buying out the advice firms. So M&G is sort of a good example of this, where they had the platform and the asset manager, but didn't really have a way into the market. So kind of buying up the advice firms that we've seen them doing kind of gives them that entry to the market and allows them to sort of extend their reach. So get their products and their funds out to clients and out to more people in the UK. So they've just recently acquired Sandringham, as we know, and that again will just help them to extend even further their products and funds out there and get their services out there.
I think just in general, in terms of the amount of activity we've seen in 2021 is a big testament to the underlying value there is in wealth management industry. I think there is a huge amount of opportunity if you can get these activities right to buy into a business which has, you know, potentially some legacy technology, some operational improvement opportunities that are there waiting to go. And if you can harness that in the right way, then you have a business that can move forward quite quickly because there is the AUM there, or there is the number of clients there is the reach within the marketplace to actually take businesses forward. So I think that's a real clear indicator that there is opportunities within wealth management as a whole, and you know, hopefully we see that carrying on into next year.
Yeah, absolutely.
Brilliant. Thank you, Jane, and thank you very much, Dom, as well. So that concludes our podcast for today. Thank you everyone for your time, greatly appreciated, and for your insights into some of the areas that have been shaping our past year. Thank you to everybody for listening, and we hope you found it informative and interesting. If you would like more information about Simplify Consulting, please visit our website, simplifyconsulting.co.uk, or just get in touch with us. You'll find all our contact details are on the website. Thank you very much and see you soon.